Hey everyone, welcome back to Corporate Decoder, the place where we expose the real stories behind Wall Street's official statements, and today we are diving into Safehold Incorporated's latest filing a report that surprisingly involves a lot of money and some interesting financial maneuvers. Before we dive in, if you love getting clear, no nonsense breakdowns of company finances, make sure you hit that subscribe button, and for those who want to connect with fellow finance enthusiasts and get more exclusive insights, join our Discord community, linked in the description below. So what is this report all about? Essentially, it's a notification that Safehold Inc. has entered into a major loan agreement. Think of it like taking out a big business loan to fund their operations and growth. The date here, the 25th of November 2025, is when this whole deal actually happened. Safehold Inc. is the company we are looking at. They are involved in real estate, specifically ground leases, which is a bit like owning the land, but letting someone else build and operate a business on it. This filing is about them getting some serious financial backing. They are incorporated in Maryland, and this filing mentions their file number, which is 001-15371, and their IRS identification number, important for official tracking. The company's main office is in New York City, and their phone number is listed here for reference, though we will skip the finer details like addresses as we want to get straight to the juicy financial stuff. Their stock is traded on the New York Stock Exchange under the ticker symbol SAFE. This tells us they are a publicly traded company and we can track their performance. Now let's get to the heart of the matter. Item 1.01 discusses the creation of a material definitive agreement. This is the official announcement of a significant new contract or deal. On the 25th of November 2025, Safehold GL Holdings, LLC, which is a part of Safehold Inc., took out a loan. This was a term loan A agreement. It was unsecured, meaning there wasn't any specific asset pledged as collateral, but it was with JPM, Chase, Bank, NA, and other financial institutions. What is important here is that Safehold Inc. itself has guaranteed this loan. This means if their subsidiary can't pay, Safehold Inc. is on the hook. This is pretty standard for corporate borrowing, but good to note. This loan is for a whopping $400 million. This money is for general business needs, like paying bills and investing in new projects. The loan is due in November of 2030, but they have two options to extend it for a year each. They took out the full $400 million on the day they signed the agreement and used that cash to pay off about $400 million they owed on another credit line called a revolving credit facility. This is essentially shuffling debt around. They're replacing one debt with another. A key detail is it's an accordion feature, meaning they can borrow up to an additional $200 million if needed, and they get the banks to agree. So this $400 million loan could potentially grow to $600 million. Now let's talk about the cost of this money. The interest rate on this loan can vary. They can choose between a few options tied to something called the SOFR rate, which is a benchmark interest rate or a base rate. The actual percentage depends on Safehold's credit rating. If their credit is good, they pay less interest. If it's weaker, they pay more. These rates themselves are pretty reasonable in the current environment. The range for interest is from around 0.85% to 1.65%, depending on the option and their creditworthiness. Banks want to make sure their loans are safe, so they impose rules called financial covenants. Safehold Inc. has to follow these. These are like promises about their financial health. First, their earnings before interest, taxes, depreciation, and amortization. Their EBITDA must be at least 1.15 times their annual fixed charges. This means their operating profit needs to be comfortably higher than their consistent expenses. Second, the value of their assets that aren't specifically pledged as collateral for other loans must be at least 1.25 times their unsecured debt. This is a measure of their financial flexibility. Third, their secured debt, meaning debt backed by specific assets, when compared to their total assets, can't be more than 50%. They also get to subtract cash they can easily access, which is important. This shows they are not overly burdened by debt that is tied to their assets. Besides specific financial ratios, there are also general rules. These limit how much more debt Safehold can take on, what kind of investments they can make, and how much money they can pay out to shareholders as dividends. If they mess up and break these rules or any other part of the agreement, the bank can demand all the money back immediately. This is a serious consequence. This next section just reiterates that Safehold is now directly responsible for this new loan obligation. It confirms the creation of this financial commitment. Here we have a Regulation FD disclosure. This means the company issued a press release to make sure everyone gets the same information at the same time, which is about fairness in the market. Yes, on the same day they finalized the loan, they also put out a press release. We are also told that this press release is included as an exhibit to this report. This is where they would often put more positive spin on the news. This part is just listing the exhibits that come with this report. This is the actual loan contract basically. It is the full legal document detailing all the terms and conditions of that $400 million loan agreement. And this is the press release they issued about the deal. And finally, this is a digital file for the cover page of the report, making it easier for computers to read. And this section is just the official sign off from the company. This is signed by Brett Asness, the Chief Financial Officer, showing that the company's top finance executive is aware of and responsible for this filing. So what does all this mean? Safehold Inc. has just secured a substantial amount of funding. They use this new loan to pay off existing debt, which might be a good move if the new loan has better terms or longer maturity. The fact that they can potentially borrow even more, up to $600 million in total, shows they have flexibility and the banks trust them enough to lend them this much. The financial covenants they have to follow are pretty standard for a company of this size and in this industry. They need to prove they are generating enough operating profit to cover their fixed costs, and they can't be too leveraged, meaning they can't have too much debt compared to their assets. These are healthy requirements. The main takeaway is that this move by Safehold Inc. seems to be about managing their debt and securing funds for future operations or investments. It is a strategic financial play rather than a sign of immediate distress. They are essentially refinancing and potentially expanding their borrowing capacity. Looking ahead, the key things to watch will be how they use this new capital. Will it fuel profitable growth, or will it be used to simply maintain their current operations? The company's ability to meet those financial covenants will also be critical. If they start struggling to meet those targets, it could signal potential trouble down the road and impact their credit rating even further. Overall, this filing shows a company actively managing its financial structure, taking on significant debt but in a way that appears calculated to support its business. It's a sign of confidence from lenders, but it also puts pressure on Safehold to perform. Alright, that is our breakdown of Safehold Inc. Its latest filing. What is your take on this big loan and what it means for the company's future? Let me know your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. And don't forget to check out the Discord link in the description for more discussions and insights. Thanks for watching, and I'll see you in the next video.